So what if you want to pay yourself more salary? And I get asked this quite a bit, so I'm going to provide a specific example with the same exact setup as before, but this time we're going to run a £25,000 salary for the year. So we can kind of see the comparison involved. So we got the £10,000 of expenses, just like before. We've got the £25,000 in salary. And now we've got an employer's bill, an employer's NI bill of £2,237. And we, of course, got the use of home allowance, which is just like before. And then we've got the operating profit figure here of the 12,451. And from that, we need to deduct corporation tax. So the available profit for dividends in this case is only £10,000. So let's work out the personal tax bill on that. And I've done this in a shorthand version this time. We're not going to go as in depth as before, but I will explain each step so you're not confused. So £25,000 in salary, and this time we've got the 10,085 in dividends. And of course the 3 to 12 use of home allowance. So the dividend tax this time is only £606. Although we have used up the full personal allowance on the salary, there's still the £2,000 dividend allowance, so the tax is only payable on £8,085 of dividends, and that's 7.5% in the lower rate threshold, just like before. And now we've got a personal tax bill of £2,500, which would have been deducted through PAYE on your salary automatically. So obviously, in the company section, you can't really see any of that because it's only doing business expenses. But on the personal side, we're starting to see some extra taxes being involved here. And finally, we've got an employee national insurance bill of £1,860. So this is the employee national insurance threshold is £9,500. So anything over that, you will have to pay employees national insurance at 12%. So the take-home pay in this scenario is £30,431. So I've included the previous figures here still, so I'm just going to delete that. And I would try to slide this up without cutting off the figures. So the previous ones were here on the left, and we've got the 24,373 profit for dividends, just like before, and also the same exact calculation from before. So you can see here that the actual difference in take-home pay by running that higher salary is £2,300 for the year. Now that's quite a huge difference for most people on this level of income that you would rather keep, I'm sure. So this is where when people ask me, oh, I can run a higher salary and I'll get the corporation tax relief from it, I'm like, yes, that's all well and good, but you're going to have all this other tax to pay instead. Okay, so staying tax efficient, we generally recommend taking dividends up to the higher rate tax threshold. So that's £50,000 in the UK for the new tax year, as well as the current one. And if you're already in the higher rates tax threshold, then we recommend at least taking the £2,000 dividend, because of the dividend allowance will mean that there's no tax to pay on that regardless. Higher rate dividends are taxed at 32.5%, so it's not the best rate of tax after you've already paid the 19% corporation tax. But even still, this is better than taking dividends after 100k, where you start to lose your personal allowance. You can essentially leave the money in your company to further invest in your business, but keep in mind that investments, they don't really get accounted for as a business expense until they're sold. For example, if you buy stock, and let's say you're selling on Amazon or something, that stock cannot be accounted for as an expense to the business until it is sold. So if you've got the company accounts up to a certain year-end date and you've got leftover stock from that previous year when you bought it in, you have to adjust the accounts so you don't add those stock purchases that weren't yet sold into the expenses for the business, because technically they're an asset, not an expense. And when they're later sold, then they can be added as an expense. But this is how the company works. Same for sole traders and everything like that. They're just not something you add in until it's sold. So buying up assets and stock and things like that to hopefully reduce your corporation tax doesn't really work, because obviously they realized this was a thing that people could use to pay less taxes and instead spend the money on business assets. But unfortunately, you don't get the corporation tax relief straight away on those. Now, I mentioned the income over £100,000, and this is where you start losing your personal allowance. So this doesn't sound like a big deal. Oh, it's only this amount of money that I lose for no taxes, which is not huge compared to the grand scheme of things. Yes, sure. But instead of it being changed to the 20% tax threshold, it's actually 40% or more. Because rather than just adding lower rate taxes to this first 12,500, they just remove that altogether and start it from 12,501 to 50k. So this is all you get for your 20% tax bill. And then they'll just add that 12,500 that you're no longer eligible for into the higher rate. So it basically pushes your entire tax bracket up into the higher rate threshold, and your tax bill goes up more significantly than you would have thought if we just removed £12,500. So this is why over the 100k is not so great, and if you can avoid it, then it's better to do so. So I mentioned payments on account previously, very briefly, but basically it is something like a prepayment for the next tax year if your personal tax bill is over £1,000. So this is the most common way you can determine whether you owe payments on account. HMRC will tell you automatically if you use their online self-assessment form. So these are going to be broken up into two 50% payments, and based on that you can kind of guess that you're basically going to have to pay your entire tax bill twice, which is true. But these do get offset later. So if you had a tax bill of £1,500, let me just adjust the colour here. So let's say you had a tax bill of £1,500. The actual amount that you have to pay by the normal deadline, which is 31st of January, is going to be £2,250 instead of the normal £1,500. And this is because of the two 50% payments on account towards the next year. And obviously the next tax year starts in April, so this January deadline is only a few months out from that. It's not very far. So you're kind of paying the tax for the next tax year as it's ending, rather than another 9 months later. It's kind of annoying, but the first payment on account is going to be the most awkward by far, because once you have the payments on account, you obviously have this extra £1,500 or whatever your tax bill was. You've got this extra amount that's sitting in your self-assessment account for the next tax year, and it's basically a tax estimate because they think you'll earn the same amount of income. So if your tax bill for next year is very similar to this number here, then all you would need to actually pay is the normal payments on account, which you can see the second payment of £750 is due by the 31st of July. That's the following July after January. So they do break them up into two payments, but if your tax bill was exactly the same as the previous year, then you just have a payment on account of £750 due by the 31st of January, and a second payment of £750 due by the 31st of July. And these would be prepayments for the following year again, because you've already paid the current year's tax liability. And so obviously if you paid too much money, then they'll adjust it with a balancing charge and then change your payments on account towards the next year, if there are any, to be reduced basically. And of course, if you had no tax to pay and you paid a payment on account, then you would just get the entire amount refunded to you. And that's how payments on account work in the simplest terms. It is a prepayment, and they'll ask you to pay two 50% amounts of your actual tax bill. So the bill is going to be inflated with the first payment, unfortunately. But once that's done and you kind of get into the swing of payments on account, then it's pretty straightforward from there. And finally, my last suggestion to everyone is definitely get software if you are running your own limited company. Better yet, get an accountant, but if you're not going to, at least do that, which I honestly recommend you do, because there's a lot of filing to complete with company accounts and self-assessments and everything in between that, such as your just every tax submission ever. So definitely get an accountant, and when you do get an accountant, make sure that they're actually using software. The software itself can be very powerful to show you, for example, the available profit in the company at any given time if you're updating the software regularly. A lot of them can also show you a personal tax calculation or an estimate of tax due based on the amount of money you've taken in salary and dividends. So, for example, we always recommend Free Agent, because what they do with their tax calculation, you can explain the salary payments and the dividend payments when they come out of the business bank account, and they've got the appropriate categories for those types of transfers. And once those go through and are explained on Free Agent, it will automatically update the personal tax calculation or the self-assessment form within the software to show you the expected tax figures on those drawings. So it's really powerful to have a software because you can see very far in advance of what's coming up to pay in corporation tax, your upcoming VAT liabilities, your upcoming personal tax liabilities, and also PAYE if you've got it. And so it's hugely important to have software, I think, these days, because it just helps you stay way more on top of what available profit there is in the business and stops you from actually overdrawing from that profit if there isn't enough, and then creating all sorts of problems with loans and the corporation tax deposit payments and not being able to afford both of those combined, and it just gets you in a huge mess. So software is essential to your business, basically. So although we recommend Free Agent, most softwares like Xero, ClearBooks, QuickBooks, they can all work just fine. Obviously, some of them have different user experiences. So what I recommend is a lot of them offer a free trial. So just pick the one that works the best for you, and obviously check that it's got that corporation tax calculation coming up, and it's also got your personal tax calculation on there as well to be able to see those things, and has the ability to file VAT returns as well as payroll. So obviously Free Agent kind of works the best because they're specifically aimed at UK businesses and have all the UK tax rates in there, but things like Xero will have to be customized. ClearBooks does include the UK. Oh, I spelt that with another O. Oh dear, let's just cross that out. Sorry, ClearBooks, my bad. I find the usability of all these are very different. For me, Free Agent works the best, and for our clients in general, Free Agent is just the most user-friendly. Xero is also quite user-friendly. There are a few quirks though to get used to, and also the fact that you have to manually add the corporation tax calculation into there because they're more of like a global company rather than just specifically the UK. But in any case, ultimately an accountant will help you be more tax efficient, or can help you be more tax efficient. So definitely take one up. And if you are a contractor, such as like IT consultant and running any kind of consultancy type business, like project management, or if you're a YouTuber and content creator, or if you are just a freelancer in general, and if you're running any of those sorts of businesses and you are UK based, then we do have an accountancy service that can help you. So thanks so much for watching till the end of the video. I know there's a lot of information to take in, but I hope it was helpful to you guys. And if you did find it helpful, please do hit that thumbs up button so I know that it was indeed a good video. And if you have any questions or if I left something out, feel free to leave them in the comments below. And of course, if you want to see more content like this, then do consider subscribing to our channel. I hope you guys have an awesome day.